Hi, everyone. I have a really great pleasure in welcoming Manish Patel, CEO, founder of one of India's most exciting fintechs, Mswipe. And I don't think Mswipe needs any introduction, but I'm sure as we do our conversations, you'll figure out what Manish has been building and how he has evolved over the last, I'd say, 9 years since the founding of Mswipe. And it's also a distinct personal pleasure because I've known Manish now for 7 years, and both as a friend and as a business partner. And it's been a very inspiring 7 years for me, just learning how dogged and focused he is, and Mswipe has been. And we hope we can get some of those insights into what drives Mswipe and Manish in the fintech world, in the merchant acquiring world. So Manish, first of all, welcome to Power Conversations at RBL. This is a platform, as I said, where we get founders of young companies and talk about their life journey, their business journey, with a view to sharing some of the learnings, ups and downs with a wider audience, so that all of us can learn from your experiences and hope to build something of our own. Welcome, Manish.
So Rajeev, thanks so much for the glowing and very generous introduction. I'm not sure I completely deserve it, but thank you.
Well, I'm sure the world will find out that you truly deserve this and more. But let me go back, Manish. And you've had a very interesting professional upbringing, and I say you're a doctor by your training and education. And sorry.
My qualification, yes.
Yes, and then you went into several startups, and maybe just walk us briefly through them, and then what was the spark for Mswipe? I mean, usually most of you have this one moment or a series of moments where you just believe that this is why the hell isn't it happening, and that probably leads to an idea. And obviously, all of us get that in our morning shower, but very few of us seldom take it to the next level. I'd love to understand, what did you do to take it to the next level?
Sure. So yes, Rajeev, this is my should I say fourth venture. Um, I started out post my qualification as a physician. Um, I just decided that that world wasn't for me. Where I set up a distributorship for alcoholic beverages. It started out with distributing draft beer. It's just that it wasn't available in the way most brewers in the world would want it to be served, which is as fresh draft beer. And I saw that as an opportunity and used that as a beachhead to establish a liquor distribution business, which I ran for almost about 18 years. And en route, I also ventured into setting up a medical claims processing business for US based physicians. This is the closest I've come to my education post graduating. I set that up with some of my med school buddies who were themselves witnessing like a midlife crisis, and they said they wanted to do something else. And yeah, that turned out to be moderately successful. We landed up selling the business. I set up as downstream expansion for our alcobev distribution business. I set up a specialty wine and beer retail business. The objective there was to try and change how wine especially was being retailed in India at that time. Everything was typically your liquor shops that would sell wine across the counter. And while we took great care in terms of producing, or our partners took great care in producing good wine, and we took great care distributing it, that the last mile was broken. And we thought the best way to bring about change was to spur some competition. And so I set up a retail business. Um, it was this retail business that actually led me to the payment business, incidentally. Like, so when I set up this retail business, till then, my business journey was largely dealing with businesses, and payments was oblivious, right? For me, getting paid was getting a check, right? from the people we supplied. And as a retailer, I first realized that I needed to collect payments besides cash from our customers, and cards was the only prevalent other digital means for accepting payments as a merchant. And I was, should I say, rudely surprised or shocked when Union Bank would be my banker for all my life. Simply said that this is not a service that we even provide our customers. Then it didn't take really a shower or very long for me to figure out that unfortunately the banking community hadn't done a very good job in enabling a core tenet of the financial services ecosystem, which is payments for small merchants, especially small merchants in this country, right? The space that is essentially the acceptance, the merchant acceptance space was dominated by four large banks, which is HDFC, Axis, ICICI, SBI Bank, and they were largely not selling an acquiring service; they were selling a banking service, right? They were firmly focused on pushing merchants to a full-fledged banking service using payments as a hook, and everything was wrong. I'm talking about 2010 when I first looked at this space. Landline telephony was eclipsed by my mobile telephony, right? So I mean, clearly, the last mile in terms of just connectivity wasn't working. Yet every single terminal in the country was a landline terminal. The terminals themselves were antiquated technology, right? And it was quite bizarre where I would walk into a big bazaar at that time, and yes, they had the $250 Ingenico Verifone machine to process card payments. But when you go to a corner store, a small kirana shop, the same machine. Now clearly the needs of this kirana versus the needs of big bazaar were very, very different. It was just a trip to Nasik where I think the deal was sealed, right? I mean, I just decided during that trip to stop by at about 8-10 different merchant locations, and just ask them why. I mean, if they had any means of accepting digital payments, and if not, why, right? And I came from a conventional belief. Everyone I spoke to, some banker friends, etc., they said, "Nahi, Manish, India is a cash economy. वैसे ही चलेगा, right? This is not. I mean, it's not about anything. It's just about how people want to pay." And I said, as a retailer, I want to get paid, right? I'm not worried about how the customer is paying me. If in fact, the logic was that, ultimately as a retailer, I want to sell goods and I want to get paid. If the customer is saying, come home, deliver goods and pick up money, I would do that. So why would I not accept payments at my shop digitally if that's how the customer actually wanted to pay? And to test that, I took this little trip and, met about 8-10 merchants. And the answer was very, very clear, right? It was fundamentally a technology and cost problem. Most of the merchants said two very basic things at that time, saying it's not about us not wanting to accept payments. We will definitely do it. First of all, connectivity sucks, right? So, I mean, I don't have a landline. So, even if I have a landline, it doesn't work for 2 months in a year when it rains or things like that. And I can't have a tool that I do business with is unreliable. And the second one was, simple things like electricity. They're saying, we need something that runs 24/7. Just because power's gone doesn't mean my machine can't work. Right? And that's where I decided, I said that it was clearly a problem of this not being core to anyone's business, especially banks. And I decided to set up Mswipe, where the core goal was to enable small and mid-sized businesses in the country to be able to accept card payments initially, and then of course increasingly digital payments, and help them do this with innovative technology. Where connectivity in the last mile was wireless. The terminals were small, built for India, cost effective. Had long battery life. All the things that are relevant for India.
It's interesting, and I know that this is something the first thing you mentioned when we met 7 years ago, that I'm a partner for the merchants, and merchants are my primary customers. And in your opening comment, you made a few references to banks pushing their banking services, Verifone and Ingenico building technology which was going to be for the global audience, landline versus mobile, power, which was a big requirement for a landline driven POS. And I think all of this, if you saw from the perspective of a bank, and let me be honest, we tried doing merchant acquiring when we started in RBL in 2011, and we fell flat on our face because we were like the 10th guy trying to do it, and frankly, we didn't have any axe to go and create a differentiation. But we didn't think like you did, that look, there's a big gap, and I can attack it differently. And I think one of the things I'd like to understand is that when you looked at this and said, wow, I mean, this is this big bank who've been doing it for 15, 20 years. They have the muscle, they have the money, they have the cross-sell of other services. How am I ever going to make money just by focusing on a very, very simple, very small sliver of service, and not being that way capitalized? And it's a very young market today. Looking back 8, 9 years, obviously a lot of water has flown. This industry's grown, but I'm sure at that stage when you were, in spite of your entrepreneurship genes, I mean, what were these issues which were going through your head in the first couple of years? Because digital and things were still very early in 11, 12, 13.
Absolutely right. I mean, there were no smartphones when we launched, right? I mean, our Swipe, so as it was called, essentially worked with Symbian phones. I remember our first application that we wrote was designed to work on the S40 platform of Nokia, and worked only with Nokia phones. So you're absolutely right. But at the end of the day, India is a pyramid. Yeah, I mean, if you look at the market, right, the market is essentially a pyramid with three clear segments, right? And I think that's even true today. I mean, I remember very clearly drawing this out a long time ago, and saying that at the top of the pyramid you have all the large offline retail stores that. These were essentially either national brands, regional brands, or just local city brands. So they've been they have a good business footprint. They have a physical presence, and these guys never really faced any problems, right? I mean, they were the prime audience for the banks to essentially go after. For the banks, this was their target audience, so as to speak, right? The next layer was essentially at that point in time, there's no way for us to triangulate the exact numbers, but we estimated that to be about a million to 1.2 million physical presence or physical stores. The next layer was smaller shops, right? These are what we call as not high street shops, but side street shops. They're on the high street, but they're off, in the side alley. These are businesses that are absolutely just single shop, single owner, or at best two shops owned by an owner. And this formed essentially a large part of the retail community, or the retail business, or the retail industry in the country. These were physical shops. They were owner-driven shops, and many years later, we ran a survey, and we were shocked to find that almost 65% of these are owner-owned shops, right? And this, in our estimate, formed about between 8 to 10 million in the country. They were not large enough for banks to provide services that they wanted to provide free in order to get banking business, right? So that was the gap that we essentially saw and went after. And then, there was this whole underbelly of what we call as micro shop or micro businesses, right? And this is your vendor on the street, a guy who generally did not have a permanent place of business or had a semi-permanent place of business, something that we could not really uh, uh, ascertain. But he was there doing some commercial activity, and this, in our estimates, is anywhere from 25 to 30 million in the country. It is this number that essentially stacks up to that 40 odd million
Yeah.
retailers or businesses that everyone talks about. And we were very clear that we didn't really want to go after the top end. We couldn't compete with the banks, who offered almost everything free. No charges for use of the terminals, very very low MDRs or discounted MDRs, and the micro merchants made no sense for us to address anyway. We didn't have a solution, or we couldn't find a viable solution for us to commercially provide them a service, and hence decided to focus on the 8 to 10 million merchants, which was a large enough market. And I think that remains true for the terminal business even today.
And along the way, sorry, go ahead.
We were very clear from day one, right? At the end of the day, we wanted to make money, like any commercial enterprise, and we just decided to charge all our customers for services, which initially, people thought we were quite foolish. When banks were giving things away free, why should you be charging for it? But the reality was that there was this whole segment of customers that nobody was addressing, right? Nobody even asked whether they would be willing to pay for it. And I think that worked out well for us. Whichever way you do the math, right? I mean, at the end of the day, if you were to trying to monetize on MDR, it's a tough battle. I mean, you'll end up making 10 basis points on a transaction. If a merchant lands up doing even 30,000 rupees, right, of transactions a month, you basically get $30, right? You can't support a network or a merchant, at a unit level in $30. It's not even going to pay for SMS fees, right? So there had to be alternate means for monetization, and we always decided to charge a platform usage fee, just flat fee that merchants had to pay for using our platform and services. And we've stuck through that model right from day one, right? We haven't ever deviated from that. Yes, it's been tough. When we started out, it was difficult, to convince customers. But over time, we've found that there is a segment of customers who value services, and they will pay you for it because they actually need it.
How has the segment which you're dealing with, their behaviors changed over the last 5 years? And I'm talking about, one is the advent of the smartphone, a lot of e-commerce around, a lot of increased usage of debit and credit cards, UPI, and then demonetization, and so many, environmental changes. Have these impacted the merchants positively, confuse them? And where does your relationship with them stand now?
Some of them have been excellent tailwinds. Demonetization for one was just a very strong uptick for us. UPI, which has been the second one, which has led to the third one, which is essentially everyone clamoring for zero MDR. Have been, I'd say, largely the 2 or 3 large events, followed by COVID, which is not payment related but still affects the payment business, especially the payment business. Yeah, so I mean, we've seen a lot of these events. This, along with a big shift in consumer behavior, typically, ultimately at the end of the day, a card is nothing but a payment instrument, right? It's an identifier as to who you are,
Sure.
And it links back into your store of money or your store of credit. And this is essentially been replaced by the smartphone. That's exactly what UPI has managed to do. They're saying that you don't really need another piece of plastic to identify who you are or tap into your store of money. your smartphone will do it for you. And there's always been these changes, but uh, honestly, at the end of the day, the way I look at it is technology will continue to change. What doesn't change is the merchant's ability to understand, navigate, and get services for him to be able to focus on what he does best, which is essentially sell goods, right? I mean, if you're there as a partner to help him navigate all of these changes and make sense of it at a cost and a price that works for him, is essentially always been the primary business, right? I mean, at the end of the day, when we started out, when he had no terminal, we were providing him with a service which allowed him to accept payments, which he previously didn't, which means we helped him further his business. Along comes UPI or contactless payments or tap and pay, or tomorrow Samsung Pay and Apple Pay and Google Pay, right? If we are going to be there by his side, help him navigate this chaos, right? At a cost that makes sense, is something that will in the long run always win, right? And if you were to look at, all of this chaos, in fact, is an advantage, because pretty much like, if you were to trace back the evolution of the card payment industry, right? You actually had different card networks that grew, very rapidly. There was Visa, Mastercard, Discover, American Express, and JCB, and various networks. In the good old days, you actually had a merchant problem. The merchant problem was he had to have 5 machines on his desk, one for Visa, one for Mastercard, one for American Express, etc. Till the industry realized, because of merchant pressure, that I can't be handling this, right? At the end of the day, you need to give me a solution that's viable if you want me to accept your network, payment instruments on your network. And I believe the same thing is going to happen. Yes, there is a transient period of instability, right? Where things are new. There are different players trying to solve that differently. But if you're smart enough and you're able to see the medium term picture, it doesn't take a genius to figure out that a merchant just wants to get paid. Now, if the same platform is going to help him accept everything, at the most reasonable price, he is definitely going to gravitate to that, right?
So, I think these are very, very interesting principles, because I agree with you that we get overawed by the technology. And as founders or as bankers, we believe technology drives business. Actually, it is what technology does, which helps us deliver a better value, a better service, a cheaper and faster service. And your North Star has always been, or your anchor has always been, the merchant. And you say, whatever my merchant needs, I'm going to solve for the merchant. And I think that's clearly, to me, more of a customer play than just I'm a technology company. How has that core evolved for you in terms of expansion of your services for merchant? I know that almost 12, 15 months ago, you launched a merchant app platform.
Yeah.
And what was the trigger for that? And how's that doing?
You're absolutely right. I mean, for me personally, it's always been a focus. I mean, the merchant's been the focus, right? I mean, technology is an enabler for me to provide a service to that merchant. Can the terminal, which is essentially a piece of hardware on someone's desk, do more than just accept payments, right? And the objective was that it was essentially the smart operating system that allowed mobile phones to do more. And if the same smart operating system runs on a terminal, will it allow merchants to do more? And that is what prompted us to launch our smart POS terminals. We had a choice at that time whether we should essentially allow the Google Play Store to run on our terminals, or should we do something different? And again, when we spoke to merchants, yes, did they know that there was a Google Play Store? Yes, but the apps there were largely meant for consumers and not businesses. And if we were to make this relevant for our customers, what we needed to have was a platform that allowed access to applications that allowed merchants to do more with the terminal. And hence we decided to launch what we call the Money Store. This is our own app store that runs on our terminals. We now have over 100 well curated apps for business that runs on our that run on our smart POS terminals. To kind of elaborate on that, you imagine this, right? Every time I walk into, say, a small restaurant, I used to do that before COVID struck. But what do you see at the typical Shiv Sagar in the corner, right? I mean, what you really saw on his desk was either a computer or a register, which he used to generate an invoice. That's all that it actually ended up doing. When it was time to pay, it was either cash or a card machine that came to my table. If you were to look at carefully, what also emerged was this other animal on that cashier's desk, which was either a smartphone or a tablet that was dedicated for the business, right? Because ultimately they needed to aggregate orders from Zomato and Swiggy and various other things that they landed up doing on that Android device. And the thought process again was very, very clear. If we enabled the merchant to do all of this, which is emulate, say, a billing app that runs on the terminal, payments, absolutely, or also run all of those apps that he was running for his business need on a separate device on the terminal. The terminal then starts becoming the hub or the central hub for him to do a lot of these activities. And that is what we've tried to do with the Money Store and our smart terminals.
Great. Tell me, you and I were chatting about COVID and what has COVID done in the initial period, and give the audience a sense of what you're seeing in terms of adoption by merchants across various segments on electronic payment products, which has been a fairly big change in COVID.
COVID, was kind of a rude shock, along with some relief. A large part of our merchants just stopped transacting the moment lockdown was enforced. I think that was the shock. The silver lining was that the entire network didn't go down, right? I mean, you still had kiranas and pharmacies and hospitals and doctors' clinics and path labs that continue to use our platform and products and services, and that's where we essentially saw business increase. Of course, in the initial days, the challenges were how do you provide services to customers who were locked down. But I think that's where we very rapidly evolved in terms of just better platforms. And it wasn't one-way street. I think it was always a two-way street. Earlier in India, merchants want, no matter what the size, they just use to doorstep service, right? Whether someone's selling them goods, they have a distributor, salesman that comes and sells them products, right at their doorstep, right? It could be the smallest of a small guy, right? Even a panwala has a candid distributor that comes and delivers stuff to him. And, the same thing goes for all other services. But at least for the first time, merchants were open to the idea of remote support, right? And that, in a way, over the medium term, is a fantastic behavioral shift for us to benefit from, right? Because practically we can solve a lot of problems on phone and on our smart POS terminals, for example, remotely. While we'd love to do that, because it just helps us become more efficient. We're able to better control the quality of service that we deliver to our customers, because ultimately, all of these are electronic platforms that we will drive these services through. So yeah, I mean, it was a difficult time because we had to make all of these transitions. We had to make them very, very fast, but also helped us be the most innovative that we've ever been. Right? We've launched 3 very, very innovative products during this time that we think are again industry changing. The first one was our pay by link service for small merchants that enabled merchants to use our terminal or app to be able to send out a short link via SMS or WhatsApp, where their customer could then essentially pay them. This meant, of course, that wasn't anything new. This was something that 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 a lot of other players were doing, but everyone was, I mean, not everyone was really doing it for the small merchant, and this is what we've essentially brought to market. We've seen tremendous success, and we continue to grow that. But I think where the key differentiator is in the technology stack. I think we are the most integrated technology stack in the payment industry. We believe in the country. I mean, everything from the terminals. We own the terminals. We design them. Whether it's the gateway and it's the switch or going directly to network, right? I mean, we are fully integrated versus a competitor that would essentially have to buy terminals from third parties, which are generic terminals. Yes, they'll have their gateway, but switching, which is extremely expensive, if you were to put it, is always outsourced. So I think we had an integrated stack which allowed us to very quickly launch the Pay by Link service. We followed this up with what we call the money back card. In digital times, in COVID times, as digital adoption, has rapidly increased. While we've always enabled merchants to accept payments, we now had a product that enabled merchants to also make payments using some of our products, right? Which is super simple. It's we call it the money back card. The money back card is given to all our merchants who have a terminal, and they can opt for settlement of their card transactions or their terminal transactions, either into the bank account of their choice, which has always been the case, or into the money back card. Whatever they put in the money back card, and they spend that money either online or offline, because it's an open loop card. It's powered by RuPay. We give them a cashback, which is essentially some part of the MDR that we receive as an issuer there.
Yeah.
And I think what's been most unique is we've now for the first time taken an acquiring platform and an issuing platform and combined into a single product that we call the Bank Box. Right. The Bank Box is a neat little package that includes our terminal, a QR code, and a card. Whereby a merchant can essentially achieve what we believe is nirvana. Right? He doesn't pay for anything. Right? He doesn't pay for use of our platform on an ongoing basis. He doesn't pay MDR. Right? All he pays is a one-time fee to sign up for the program, and once he has that, he essentially pays no rent. We managed to do that because of the work that we put in 2 years before, where we really managed to compress the cost of our terminals to a ridiculously low level, and we are now taking the benefit of that, where by payment of a very nominal one-time fee, the merchant doesn't have to pay for the terminal for life. If he opts for settlement into the card, he doesn't pay MDR, right? So this is our way of essentially, should I say, leveling the playing field for the merchant between cash and digital payments, right?
I mean, it's brought to you a very interesting juncture. COVID clearly has raised the inflection point, but you have today now, banks are no longer as formidable as they were maybe 10 years ago in the merchant business. I mean, they're still important, but you have well-funded, I wouldn't call them startups, but behemoths, Paytm, PhonePe, Jio is raring to go, and there are probably a few more in the horizon. How do you hold yourself when you think about your journey the next 5-10 years? And is it still going to be, let me continue focusing on my merchant and his or her issues or problems and needs, and things will solve? Obviously, we have to be agile and we have to be tech focused. But yeah, it's a very different world from 10 years ago when you were looking at a market which had a lot of gaps.
Rajiv, it's not that HDFC has ever had a smaller balance sheet or aggression in terms of going after any business. The difference is, does it make economic sense, right? At the end of the day, I believe we operate in capitalist free markets. And the core tenet of that is you have to make money, right? At the end of the day, it has to be for profit. The
Mm.
second one is I don't think India is a winner take all market. Right? And that's been proven time and time again. It's not a winner take all market. Um, and lastly, is the capital that drives all of these businesses comes from the mothership, right, of all capital markets, right? And there, it's profit that is the sole driver of everything. I mean, sometimes you get blindsided by events or periods of time where you lose focus on the core tenet, and that is you have to make money. At the end of the day, we work very hard to ensure that we are the lowest cost player. And at the end of the day, whatever we do has to make money. If somebody else is doing the same thing, um, either they're far more efficient than us, or then they've just decided that they don't want to make money, right? I mean, and I can't base my business on whatever their guiding principles are. I mean, our business is clear. It's a large market. Ultimately, India even today has 4 million terminals versus 18 million in China, or about a similar number in the US. There are about 3 million terminals in Turkey. Uh, you know, that that itself shows that in a country like India at 4 million terminals, there's a lot of headroom to grow. This is ultimately a physical business. It's a street fight, right? This is not a carpet bombing exercise where you can essentially take someone out, right? You have to walk the streets. You have to connect with the merchants. You have to provide them a service. You can't do this remotely, no matter what you do. And
Mm.
That's what we essentially end up doing. And we believe that we have the best technology. We have the best cost structure. Um, and there is a market, right? And we're going to take a certain share of that market. Uh, and I believe we have all the tools and the determination and the grit and adequate capital for us to continue to grow our business. Will others do something bigger, better? Maybe, uh, but I guess time will tell. At the end of the day, bigger in my mind is in a commercial enterprise is profit, right? It's nothing else. It's return on capital.
So, so Manish, you've said a few words which I rarely hear from founders and entrepreneurs, and I guess that's part of the way things have been built up. But you mentioned profit several times. Would you care to share with us where are you in your profit-making journey or loss minimization journey?
Look, in fact, one of the nicest things that happened to us is during COVID. All of these efficiencies then immediately emerged, right? I mean, as our growth costs fell away, we've become, we immediately broke even. In fact, we broke even in March, and we've broken even or nearly broken even every single month since then. During this COVID period, so burns essentially stopped. Um, uh, you know, uh, we have more cash in the bank today than we had before COVID, right? So when so it's just helped us remain focused on some of the things that we did lose focus, to be very honest. 18 months before this, because sometimes it's just human for us to lose track uh, of uh, of your core goal when there is a lot of noise around you. Um, fortunately, fortunately for us, we didn't get carried away that far that we couldn't, recover. So yes, we've had some growth-related costs, maybe some excessive growth-related costs over the last 18 months before COVID. But that I think has been the biggest boon for us. Is just helped us stop, reflect, and say, hey guys, what are we really doing? And what is that we really want to achieve? And it clearly wasn't burning through our investors' money. Right? It is essentially building a business that's a solid business that is going to deliver value and a return.
What has inspired you over the last 10 years of this journey or before that? And who do you turn to in your mind when the chips are down, when things are frustrated? What would you say is your inspiration?
Uh, Three sources of inspiration. The first one is my investors, right? Because at the end of the day, like I said, um, they have a wider view of the world. We as entrepreneurs kind of get channeled into a kind of a narrow channel, as we progress, and also without that obsession, you can't really be the best, and hence you do get narrow vision, and that is where I think I lean on our investors, and because I think we are together in a journey. I think our investors are more partners than just investors, because if someone's been backing you for a period of anything more than 3 years, they tend to become partners, right? And they're there, and they will give you the best advice, right? And some of it may not be what you like, but it's the truth, right? So you have to wait in. The second one is our customers. They never lie, and in India, the real fact is the customer will be brutal, right? They will tell you, they don't sugarcoat things. They will tell you things the way they are. So you have to listen to your customers. And the last one uh, is largely driven by what's happening globally. Whether we like it or not, in the technology business, we are essentially in India implementers of technology, right? We're not the inventors of the technology. And whatever, core innovations that actually occur are occurring, in the Valley, in some parts of Europe, and whether we like it or not, ultimately these technologies do influence, how we run and operate our businesses. And if we don't really keep a close eye on what's happening there, you can't really be ahead of the game, in India, and uh, you know so yeah, these are the two or three things that are my kind of go-to sounding boards, so to speak.
Any parting comments for our audience, many of whom are also in the startup phase or aspiring to build businesses, Manish, over and above what you've shared?
When I started my business, there was no venture capital. When I started actually my entrepreneurial journey, right? So a lot of my early businesses were funded by debt and borrowings from friends and family, till you were able enough to prove to bankers that you were reliable enough to be given capital. Um, and I've been very, very lucky that I have been able to transition to running businesses which are funded by risk capital, which is essentially equity, and not debt. Um, but you know there are this has now become a tsunami, right? And this essentially makes you forget the core the core uh, principles of commerce and business, right? That at the end of the day, you have a balance sheet, you have a P&L, and you have cash flow, right? Uh, One is vanity, right, which is your balance sheet. You then have your P&L, that is sanity, right? But then you have cash flow, which is reality. you can't lose track of either of these, right? I mean, balance sheet, yes. A lot of people get carried away by a balance sheet, but like I said, balance sheet honestly is just vanity. You have to be firmly focused on the sanity and the reality, which is your P&L and your cash flow.
If nobody knew you as Manish Patel of Mswipe, they'll think you're a banker. The way the way you're talking about it. But hey, Manish, thank you so much. This has been a wonderful conversation, and I'm actually learning a lot more. I hope people listening to this eventually will also take some interesting insights from your career, from your building of Mswipe, the ups and downs you've had, and to me, some of the core themes of India as a large market. It's not a winner take all. Focus on customers, customers, customers. Get a total cost of ownership down where you can battle any downs in the market, and ultimately have a return on capital and be focused on the reality and the sanity of the business. So really appreciate. Thank you so much, and thank you for sparing your time with us today.
Not at all. It's been an absolute pleasure. Thanks for having me. Really appreciate it. And yeah, thank you.